Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, other than in the U.S. we had unemployment claims come in at 266,000 versus the expected 261,000, so a little bit higher than expected. And natural gas storages came in at 17 billion cubic feet, which was expected to come in at 29 billion cubic feet. So a bit of a drawdown there. Overall, crude oil, or overall markets here with crude oil, as you can see, /CL on the lows, was just making lows as I started speaking there, and down around 67 cents on the day. Just can't seem to find a bid. There's a glut of oil out there, and the overall market is taking note of that finally. On to gold. Gold is up on the day. Again, we're talking about, gold was a little bit higher earlier, opened up higher, but is lower, but again, higher on the day by $7. The overall equities are down, so it's kind of a flight to quality again today. Although bonds just treading positive right now. The /ZB, as you can see, just barely above by 2 ticks. The overall equities are down on the day. That's why you're starting to see some continued push into quality like gold and bonds. As you can see here on the NASDAQ /NQ, the E-mini NASDAQ, down just over 6 points right now. The overall market was higher right off the bat and overnight, but then as soon as the day session opened up, these markets really started slumping. And E-mini S&Ps /ES down about 3 points on the day. Really stuck in this range right here. As you can, for the past couple of weeks, it's just been, inside day after inside day. The market really trying to figure out which direction it wants to go. It feels like that rubber band being wound real tight, and one of these days it's going to pop one way or the other, and you need to be ready for that kind of situation to happen. One way we're going to tackle this kind of situation where we see this rubber band getting wound real tight, it's an indication that the market is building up a lot of tension and wanting to spin out. Well, which way is it going to go? One might say it goes higher, one might say it goes lower. You might not even have a particular direction in mind, just knowing that you can see this bit of wound up rubber band action happening, and when it releases, it really starts moving. But which way is it going to go? We're going to talk about that in tomorrow's webinar, and we're going to find a strategy, or I'm going to teach you a strategy that you can implement around a situation like this, where you can take advantage of either market direction. As long as we get this big move in a situation like this where we can see it culminating, it's going to be a good strategy to put in our portfolios in order to take advantage of that move. The move, we don't know which way it's going to go, but we can see that it can't stay in this range for too long because there's just too much sideways action. I think that it's probably going to pop to the downside, but who knows? It could go to the upper band, continue to print new highs, and in that way, or in that regard, we would be able to take advantage of that as well. As you can see here, this is the 15-minute breakdown of the daily chart. This is the overnight action, really pushing higher, but as soon as the overall markets opened up right here, we kind of tried to rally, but then the bears came in full force and just slammed this market down rather quickly. So you can see this just on the intraday chart also, just this action back and forth, the bulls battling the bears, and the bears seem to be winning the overall battle to the downside. The bulls come in late in the day to get their print, but I don't know if they have much left in the tank to continue this type of action. So we're going to be talking about that tomorrow in the webinar and how to take advantage of this situation. Apple, I'm looking at Apple. I need it to come off a little bit. I'm going to be looking to roll this out in time, try and get a little bit more credit for it, increase my duration, and keep this dream alive for a little bit longer. Yesterday I was pretty happy with the market action, but today we opened up right there at the low and started rallying. It is kind of kicking the trend and positive on the day when the overall equities are down, so it's beating that trend. I haven't put on a whole lot of trades today, or I haven't put on any trades to be quite frank, because I need to save some margin. We got the big dogs coming out with their earnings today. So we've got Google, we've got Amazon, Win, not necessarily a big dog, ExxonMobil, Baidu. So, but the Google and Amazon, those are big dollar stocks. So they're going to take up a lot of margin. So I'm kind of holding off my margin for those. I'm going to be doing those trades in the next couple of hours, afternoon on the East Coast. So that's going to be where I start putting those on. You can follow me on Twitter at Wolfman's blog. I usually tweet those out after I put those trades on, so that some of you guys that are watching these daily market commentaries can go on my Twitter feed and see what I'm doing in those particular earnings setups. So like I said, Google being and Amazon being the big dogs, they are going to take up a lot of margin. One thing is that, if we looked at Google on the chart, for instance, you can see it doesn't have really high implied volatility, but if we look at the trade page, we can see that there's going to be a big volatility crush happening in Google by about 50 points. So that's going to really suck out those premiums. I've done a lot of webinars, and I've actually built out a whole class on volatility crush and how to set up these earnings trades. So you can find that at Pro Trader Strategies. Also, I don't have enough time in a daily market commentary to go into that. But I even talk about this volatility crush, how you can calculate what your premiums are going to be after that happens. I mean, it goes into a lot of detail over those courses as to how to figure everything out. And if you haven't watched those, I implore you to go and look at that. It's over 20 years of my knowledge basically thrown into those webinars, stuff that we used to use on the floor that is very important that nobody really talks about out there on the street these days. So go to ProTraderStrategies.com, sign up for that, and check out the webinar we're going to be doing tomorrow, because if you feel like there's an underlying that's ready to make a massive move, this is going to be the strategy to implement into that type of scenario. And right now, with this implied volatility so low, it's going to be a great strategy to take advantage of that situation. All right, that's all I got for you guys today. If you can't take that, take it easy.